JB, good to see you, brother. How you doing? Evening. Tor, good to see you as well. How you doing? How you been? Evening. Paul, good to see you as well. How you doing? Evening. How you been? Evening, mate. And all. Let's go, Paul. Bill, good to see you as well. How you doing, brother? How you been? Oh yeah, I'm doing great, Bill. How you been? Yama, good to see you as well. How you doing? How you been? Comatose, hi Miles and CMF, good to see you as well. How you doing? How you been? T, hello Miles, good to see you as well. How you doing? How you been? Hi Miles and CMF. Sam, good to see you as well. How you doing, Sam? How you been? Ian, evening Miles and family, good to see you as well. How you doing, Ian? How you been? Any XRP news, case ends, and ETF this weekend? Yes, we're going to go through ETF news, XRP news, Ripple news towards the end of the live regarding that matter. Let's go, Miles. Let's go, Harris. Good to see you. How you doing? Hello, Miles. Scott, good to see you, brother. How you doing? I still haven't replied back to your messages, Scott. I had to reply back to him. I'm so sorry about that. What's up, Miles? What's up, CMF? Kerry, good to see you. How you doing? How you been? Am I the first one and only viewer on YouTube right now? I think so. Doing good, bro. Thanks, bro. Let's go, Billo. Kerry, good to see you. How you doing? Hi, Miles and CMF. Dennis, good to see you. How you doing? How you been? Hello, Miles. Mickey, good to see you. How you doing, Mickey? How you been, brother? Hi, Miles and CMF. I'm away, but listening. Let's go, Stormy. Good to see you. How you doing? So, let's do intro. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. I go by the persona of Crypto Miles, and I'm the host of this live. And this is episode 261 of the CMF Live, which is incredible one, episode 261 right now. And on this live, I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, regulations, vital information for you to know about regarding the world completely transforming into a digital space. And we also do Q&As on this live as well, which means if you do have any questions, don't be shy, put them down inside the comment section. I'll be more than happy to answer any questions you may have. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So if you're watching this live for the first time ever, let's go, and welcome to CMF Live. And if you're a regular, let's go CMF. Also, I want to take a second just to say thank you so much to everybody who's liking this live on X, because I'm getting notifications back to back right now on X. Thanks so much to everyone from the CMF who's liked this live at the beginning of the live, who's retweeted this live on X, who's put a comment outside the live and liked each other's likes as well. And hashtag the XRP Army as well. And thank you so much to also everyone on YouTube who's watching right now who's also liked the live and put a comment outside the live as well. Now, before we go through the news topics on tonight's live, let's go inside the comment section first, but I'll give you a breakdown of what we're going to be going for on tonight's live. On tonight's episode of CMF, episode 261, these are the topics we are going to be covering. We're going to be talking about the US inflation report that's came out. We're also going to be talking about Van Eyck's new perspective on the Bitcoin price, essentially price points in terms of ETFs. We're going to be talking about Trump's essentially closing on terms of who's going to be chosen for the next OCC. Is he pro-crypto? Is he not? In most cases, it is Trump, so he is. We're also going to be talking about Franklin Templeton on tonight's live, bringing their $512 million essentially FOBXX fund to a particular crypto token. We're also going to go through on tonight's live regarding Circle USDC hitting new numbers, catching up to essentially USDT Tether. We're going to be talking about Iran on tonight's live as well, which is an important factor of what's happening because that could cause market turbulence. We're also going to be talking about on tonight's live regarding JP Morgan in terms of disclosing their Bitcoin holdings. JP Morgan's new filings show that they are still holding a substantial amount of Bitcoin, even though Jamie Dimon still does go against Bitcoin. We're also going to be talking about essentially Wyoming Highway Patrol getting involved in the crypto space, which is interesting to see. We've seen American states come out essentially and hold crypto assets, but never a police department coming out and say they're going to create some sort of a funding essentially for cryptocurrencies. We're also going to be talking about more regarding Hester Pierce and her crypto task force, because she's just came out with a new 10-point plan of what's going to be happening inside the cryptocurrency space in terms of regulations coming out from the SEC. We actually have a 10-step fold of what's going to be happening, which we're going to go through on tonight's live in terms of bullet points. We're also going to be talking about the Paris Blockchain Week that's coming up. It's a business event. There's going to be a lot of CEOs, investors, executives, And they're all there for cryptocurrencies, blockchain technology in general. We're also going to be talking about tonight's live regarding the matters of unlocking new fintech revenue streams for digital asset custodies. In terms of Ripple, essentially, we're going to go from tonight's live. Ripple has came out with a new blog report on what's essentially going to be, moving forward in terms of neobanks, fintech banks, essentially transactional purposes. How much of the institutional space is joining the blockchain space? A perspective coming from Ripple. We're going to go from tonight's live, and regarding the XRP ETF update news regarding the SEC, and regarding what essentially Eric and James said. How there's a 56% or 65% chance of an XRP ETF announcement happening this week. A perspective, as I said previously, coming from Eric and James, who are essentially major analysts from Bloomberg, ETF specialists, who've also been correct on a lot of points. And they did say essentially this week we are going to get some sort of announcement regarding XRP ETFs, and seems that we're going to get it very soon, by the looks of it, tomorrow. So before we go for any of these news reports, and the first one being essentially the US inflation data report that came out, the CCPI, and before we go through that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. Be more than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight into the data reports. Let's see where we were at. We were at here. Hi, Miles. FOMO, good to see you as well. How you doing? How you been? So, bro, I have a proposition. Contact me. Interesting. Direct message. I'll take a look at it. Sir, if you can read this sentence. I mean, there's a lot of weird people on tonight's live, I'll be honest. Hi, Miles and CMF. Shelly, good to see you as well. How you doing? How you been? Evening, Miles and CMF. Manny, good to see you as well. How you doing? How you been? Good evening, Brother Miles and CMF family. Funky brother, good to see you as well. How you doing? How you been? Good evening, Miles and CMF. Good to see you as well. Orphan, how you doing? How you been? Good evening, Miles. How are you doing, brother? I'm doing great, Callie. Good to see you as well. How you doing? How you been? Miles, you really need to start your live show earlier as I keep falling asleep. I'm sorry about that, funky brother. Tonight, I had a little bit of an issue with Restream, the platform I'm using to do the live. They basically logged me out, so I had to log back in. It was kind of a difficult situation, but apologies about that. Good evening, Miles and CMF Free and Forever. Good to see you as well. How you doing? How you been? I always have to catch up the next day. I'm sorry about that, funky brother. If you're watching this for the first time ever, where have you been? Too late. Let's go, Paul. How you doing? Good to see you as well, Paul. How you been? Hello, Miles. Let's go, Scott. Miles, what is your thoughts on ETH? Is that what you're trying to say, Scott? Elaborate. Hello, Miles. Johnny, good to see you as well. How you doing? Johnny Beverell, how you been? So, first news topic on tonight's live is regarding the CCI data reports that just came out. So let's just go through them. U.S. inflation essentially surprise sparks the market space. The U.S. Consumer Price Index, CPI, rose by 3% year over year in January 2025. The report came out today. I revealed that yesterday we're going to get some CPI report data coming out, which is going to have an impact on the market space, good, bad, or mild impact is what it pretty much had inside the market space. But here it is. Essentially, the price index CPI rose by 3% year over year in January 2025. Exceeding analyst forecast, monthly inflation climbed by 0.5%, translating to an essentially annualized rate of 6.2% in terms of core CPI, excluding volatile food and energy prices, increased by 3.3% compared to previous years. Markets reacted swiftly. The S&P 500, Nasdaq 100, and Dow futures each fell over 1%. Bitcoin dropped essentially 2.4% within 15 minutes of the data reports coming out, easing essentially $83 billion from the cryptocurrency market total value, equivalent to the entire market capitalization of BNB pretty much. Economists essentially Peter also criticized the Federal Reserve's response, arguing that the delayed rate cuts worsen inflationary pressures. As I said previously, the more essentially the Fed keeps on delaying rate cuts, the worse the bubble is going to get, the massive crisis bubble situation. And I'm not the only one. Peter, who's an economist, keeps on coming out and saying to the Fed that they need to start doing rate cuts, even if it is small rate cuts at a time. Now, arguing that delayed rate cuts can worsen the pressure on essentially inflation. He suggested the Fed should raise rates by 200 basis points immediately to curb the rising rises happening right now in terms of prices. Peter also contested that the market initial sell-off of gold, calling inflation bullish for metal. Essentially, real rates are falling because the Fed isn't hiking. He wrote on social media, higher interest rates typically reduce liquidity pressures and speculative assets like cryptocurrencies. Bitcoin's role as a digital gold faces renowned scrutiny. While some investors view it as a hedge against inflation, its sharp decline aimed at the CPI data underscores its volatility. Institutions such as BlackRock have previously endorsed Bitcoin as a risk-off asset, but its reactions to macroeconomic shifts remains inconsistent. As I said previously, Bitcoin has not yet earned the title essentially of digital gold, because once again, it's not reacting like gold. The data report comes out, the CPI data report comes out, and essentially gold is going slightly up in price, whereas Bitcoin drops in price. You can't call something digital gold when it doesn't react like gold. I've said this previously regarding Bitcoin. I think personally, they've given the title digital gold way too soon to Bitcoin, because it's not reacting like gold on any level. When there's a war, Bitcoin is volatile, gold is going up. When there's a data report coming out, Bitcoin is volatile, gold is going up. In any essentially instance, it doesn't react like gold. And it does talk about how BlackRock has given also the category of risk off to Bitcoin. And I've said this before, it cannot be a risk off asset if it doesn't react like a risk off asset, which is gold. The Fed step essentially the next steps essentially from the Fed are unclear. Investors now debate whether rate hikes or rather than cuts could emerge, a scenario not widely anticipated until the latest data reports do come out even more. The crypto market's $83 billion loss reflects the broader uncertainties, and analysts note that the assets tied to macroeconomic essentially sentiments often struggle when inflation essentially outpaces policy adjustments. Bitcoin drop essentially mirrors trends in equities, suggesting overlapping investor concerns. Now, Bitcoin did slightly drop a bit today, so the rest of the crypto market space, but they all climbed up 1%, 2%, 3% up in terms of some projects. Some projects did essentially 10% today based on the partnership announcements that were coming out from them. But in general, the CPI data report, it didn't impact the market space drastically. But once again, Bitcoin didn't react the correct way, which was supposed to go up just like gold, but instead it went down and gold went up. Now, Van Eck is what we're going to be talking about next. Van Eck state Bitcoin bills could trigger 24/7 essentially Bitcoin purchases if intact. Van Eck has came out with a perspective and said pretty much, if the stockpile that Donald Trump is creating, or Donald Trump's administration is creating, the crypto stockpile, turns into instead a Bitcoin stockpile, then this is what's going to happen to Bitcoin, a perspective coming out from Van Eck. A new analysis by Van Eck suggests that 20 state-level Bitcoin reserve bills, if intact, could lead to $23 billion in Bitcoin purchases, equivalent to 247,000 essentially Bitcoins. This estimate excludes potential pension fund allocations, which could further increase the demand if lawmakers advance these proposals. And Matthew, Van Eck's head of digital assets research, shared his findings by highlighting essentially the growing interest among U.S. states in terms of holding Bitcoin as a reserve asset. These bills also introduced in various legislators proposals that state allocate a portion of their reserve towards Bitcoin. The projected $23 billion in buying pressure could add significant upward momentum to Bitcoin's price, especially if pension funds and other state-managed investment vehicles also allocate towards Bitcoin. While there is no state has yet essentially implemented such legislations, growing interest among policymakers indicate that Bitcoin's role in government reserves may expand. As of February 2025, numerous U.S. states are considering legislations to establish a Bitcoin reserve or a crypto stockpile. Notably, Utah has made significant progress with its Bitcoin reserves bill passing the House Economic Development Committee on January 28, 2025. To be fairly honest, Utah's essentially bill isn't just related to Bitcoin, they're actually going for a crypto stockpile. The House of Economic Development Committees on January 28, 2025, and currently awaiting essentially the Senate's approval. If approved, Utah could become the first state to implement such a reserve, a crypto reserve. Other states actively pursuing similar initiatives, including Missouri, Arizona, Oklahoma, Kentucky. Kentucky essentially recently became the 16th state to introduce legislations for a Bitcoin reserve or a crypto reserve, joining essentially others like Alabama, Florida, Massachusetts, Missouri, New Hampshire, North Dakota, Ohio, Oklahoma, Pennsylvania, Texas, Utah, Kansas, and Wyoming. A lot of American states back-to-back are applying for some sort of a Bitcoin reserve or a crypto reserve. And Utah is the only one that's pretty much passed all the steps. They're just waiting for the final approval. So if Utah gets it, it'll be the first American state to ever have a crypto reserve, not just a Bitcoin reserve. Now, on that topic, essentially, Vanek's perspective, talking about how 247,000 Bitcoins will be purchased pretty much instantly if America does decide to do a Bitcoin reserve instead of a crypto reserve. And that will just be only for America's purchase, excluding the pension funds that's already in Bitcoin. It can go more towards Bitcoin and so on. But yes, I could see that possibly happening if we did get a Bitcoin reserve, but we're not. We're getting a crypto reserve, which means American crypto projects are also going to be involved. Otherwise, it would have been an executive order and it would have said Bitcoin reserve, but instead it's a digital asset, essentially stockpile. Now, which I'm in a lot more favor of. As I said previously, I said this before there was ever even an executive order, as it just makes more sense to have essentially a crypto reserve than a Bitcoin reserve. Now, Trump is obviously going around and choosing who is the best person to lead government departments and who are also pro-crypto. Everybody that Trump has chosen in terms of the financial department and the financial category in America is pro-crypto. Putting Mark as the acting chairman of the SEC, who's pro-crypto, Hester Pearson, Crypto Task Force, pro-crypto, the CFTC acting chairman, pro-crypto, the FDIC essentially acting chairman, pro-crypto, and now he's chosen essentially a few members that could lead the OCC who are also pro-crypto. Trump closing on the crypto regulation team. We're getting to a stage where he's picking the next few people. President Donald Trump's efforts to assemble a veteran cast of pro-crypto regulators matured with 2 more nominations, Jonathan Good and Jonathan McCarran. Now, Jonathan Good, as Jones' essentially day partner and former top lawyer at the Office of Essential Controller of the OCC, has reportedly earned President Trump's nomination as the OCC's next boss. Good also worked as the OCC chief legal officer and senior deputy essential controller, an important position with an input on U.S. federal banking rules. Good also served as a Bitfury's chief legal officer and could push for essentially greater banking in terms of crypto integration, if confirmed by the Senate as the new controller. Now, notably, 2 bills in the House and Senate would appoint the OCC as the primary stablecoin regulator. A change of guard in the Consumer Financial Protection Bureau brought Trump's 2-star essentially started crypto team near completion. President Trump's tapped Jonathan McCarran also as the next candidate from the Federal Deposit Insurance Corporation to oversee the CFPB after criticizing the Bureau of essentially tax operations. McCarran has advised the Department of Treasury on policy and was previously essentially attorney for Senator Pat Toomey. Now, the president also plans to combine the FDIC and the OCC, according to Wall Street Journal. Aimed leadership changes across bevy of essentially federal agencies. Trump has nominated several pro-crypto figures to key watchdog offices as the White House pivots to a new digital asset approach. Because a lot of people are still waiting, essentially for legislations, for regulators to come out, for the crypto space to move. But what Trump is doing right now is, as I said previously, laying in the foundation for the crypto space, because we didn't even have a foundation to rely on inside the crypto space when it came to essentially the United States government because of the previous administration of circus freaks, which were Biden's administration. But because a lot of people are still right now waiting for Trump to make some major moves inside the crypto space, and in my point of view, he has. Signing that executive order was the biggest major move he could have possibly pulled inside the crypto space. Getting rid of Gary Gensler was a bigger one than that. But what he is doing still is trying to lay the foundation for the crypto space by hiring the most pro-crypto people there is for high-profile seats inside of essentially financial departments in the US. And you can see that essentially with his new picks for the OCC or his new pick for the FDIC or his new pick for the CFPB. Now, figures like essentially Paul Atkins as the US Securities Exchange Commission chair and A16Z crypto policy chief Brian to the chair, Commodities Future Trading Commission, Good at the OCC, and McCarran for the CFPB paint a very crypto-friendly regulatory cabinet for the United States government. A pro-crypto lawmakers also sit on crucial committees for financial rulemaking. For example, Senator Tim Scott and Representative French Hill announced moves in Congress focused on digital asset policies, starting with stablecoins and then moving on to the rest of the crypto space. in my point of view, as I said previously, Trump has done an incredible amount of movements, and today he's just, essentially getting close to making more announcements of 2 new people that are going to be heading financial departments linked to American banking systems. That both of them are pro crypto, which is incredible to see of how much progress this man has made as the president of the United States at such an early stage. And as I said previously, the first 100 days, the most crucial essentially days for a presidency, for a lot of things to change and a lot of things to happen. But my point of view, Trump is working at a rapid pace. Some people think Trump is not moving fast enough for the crypto space, but he is. He's laying in the foundation, which is the most important part, essentially, a structured foundation. Now, Franklin Templeton is what we're going to be talking about next. But before we talk about Franklin Templeton's new crypto pick, let's go inside the comment section first, and then we'll go straight to Franklin Templeton news. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. So let's go inside the comment section first, and then we'll go straight into the Franklin Templeton news and which crypto project they've chosen as their next network, pretty much. So let's just go inside the comment section. Miles, I'm hearing a lot of noise about a black swan. Is this likely or even possible? Johnny, good question. A lot of people, essentially what I have said in the past regarding a black swan type of event is that consider it as an outcome, but not the outcome. So a black swan event can possibly happen. There's been announcements or rumors of black swan events for the internet going out, for example, which was the EU's internet data cables all run through one particular sea. And Iran in the past has said that they'll cut off the West from the internet in terms of data through that sea as well. Now, they haven't done that so far, but they said they will do it. Now, this is why I say consider a black swan type of event as an outcome, but not the outcome. There are other ways of implementing this whole digital world or a CBDC world, essentially. So is it likely for a black swan event? Yes. Is it the only outcome? No. Consider as one of the outcomes, not the outcome, is what I would say. So you don't get shocked if the other thing happens. Introducing interesting time, we will see a crash or an upside. Yeah. Well, what I can say is the next news we're going to talk about after the Franklin Templeton news is a scenario of a war happening, which if that happens is going to cause definitely some turbulences in the market space, also some distraction inside the market space as well. But that's, after the Franklin Templeton news. So let's go more inside the comment section. I'll give you more on that. Good evening, Miles, and all CMF. Good to see you. How you doing? How you been? How's things? Hi, Miles and CMF. George, good to see you. How you been? How's things? So Franklin Templeton. Franklin Templeton is bringing its $512 million FOBXX fund to the Solana network. Franklin Templeton, a leading financial services company, has expanded its on-chain U.S. government money market fund, FOBXX, to Solana's blockchain. FOBXX, launched in 2021, has grown to $512 million in market capitalization. It invests nearly essentially 100% of its assets in U.S. government securities, cash, and secured repurchase agreements, ensuring minimal essentially credit risk. The FOBXX from Franklin Templeton is also accessible on multiple blockchains, including the Layer 1 blockchains Ethereum, AVAX, and Ethereum Layer 2 blockchains like ARB, Base, Polygon, EP261, and others. Solana is the latest addition for Franklin Templeton, signaling the blockchain's increasing importance in tokenization. As of January 31st, 2025, the fund had essentially a 7-day effective yield of 4.2%. Each essentially Benji token represents one share in the fund, making it the first US mutual fund to use blockchain for record keeping and transactions. By the way, nobody can buy Benji token, just letting you know that. It's for institution purposes only. Solana has emerged as the dominant platform for new token launches, particularly meme coins and decentralized trading. According to Pantera Capital, 90% of all new tokens now appear on Solana's based decentralized exchanges, DEXs, up from just 1% in late 2023. Despite being known for meme coins, Solana is attracting more institutional investors. Hedge funds, essentially, and wealth managers are increasing their SOL holdings after crashing below $10 post essentially FTX SOL situations rebounded and so on. Now, tokenization is growing fast in crypto as companies move traditional assets like bonds, commodities, and funds onto blockchains for faster and more efficient transactions. Ethereum is leading with $3.8 billion in tokenized assets, essentially making up 52% of the market. Solana, currently in the 7th place with $135 million in terms of tokenization, is gaining popularity and could rise further maybe. Franklin Templeton has been expanding its presence in the crypto space. It funded Bitcoin and Ethereum ETFs in 2024 and seeking approval for a crypto index, essentially, in terms of an ETF. And on February 10th, 2025, it also registered a Solana ETF trust in Delaware, reflecting its growing interest in the network. However, regulatory challenges remain as lawsuits allege in terms of Solana as an unregistered security and potentially complicating ETF, essentially, approvals. In terms of Franklin Templeton choosing their next project as Solana to put their FOBXX on, it's great news for Solana. Also, for them to be applying for an ETF, another great news for Solana. If you're somebody that's in Solana, that's incredible news for you guys right there, honestly. But there's also good news for AVAX because they're operating on that chain too. Now, Circle is what we're going to talk about next. So moving off essentially Franklin Templeton's announcements of Solana being their next chosen network alongside AVAX, ARB, Base, Polygon, and Ethereum. To Circle. Circle's USDC is catching up very slowly though, but it is catching up to USDT. Because USDT has been kicked out of the EU, also being kicked out of Canada on some exchanges, and next, USDT in most cases is going to be kicked out of the US market space. That's pretty much guaranteed in a way. No financial advice at all, but it seems like it is guaranteed in a way that USDT is definitely going to be kicked out of that too. Because the United States has announced, in terms of their stablecoin essentially rules, which was the Genius Act they came up with for stablecoin regulations, that it has to be audited. If you want to be a stablecoin in America, you have to be audited back to back, which Tether is going to struggle on that feature because they didn't want to be audited by the EU, which what makes you think that they're going to be audited by the United States in that sense. So Circle's USDC is slowly catching up, and here it is. Circle's USDC hits record market cap over $56 billion as stablecoin demand is starting to climb up. Circle's USDC, the second largest stablecoin on the market space, rose to a record market capitalization of over $56 billion this week, as stablecoin growth essentially showed signs of accelerating. USDC added, for example, $10.2 billion to its market cap over the past month, driven primarily by the raising demand on Solana's based DeFi essentially trading volumes. Amatus data shows that more than double of the $4.6 billion growth of Tether's USDT. In the past month, Tether's USDT had a growth of $4.6 billion, whereas USDC had $10.6 billion growth. The largest stablecoin by market essentially and Circle's biggest competitor during the same period. USDT still dominates, obviously, the stablecoin space with $142 billion market cap, but USDC is catching up and Tether is losing traction. With the latest growth sprout, USDC surpassed this 2022 peak and fully recovered from the 2023 US regional banking crisis, which dealt a serious blow to the cryptocurrency. At the time, Circle held essentially a part of the stablecoin reserves in bank deposits at Silicon Valley Bank, which suffered a bank run and led to USDC temporarily losing its peg to the US dollars. Now, many token holders fled to USDT at that point, helping Tether to surpass its 2022 peak market capitalizations as early as May 2023. Now, stablecoins are a special type of cryptocurrencies with prices anchored to an external asset, prominently essentially to the US dollars. USDT and USDC are widely used for trading on crypto exchanges and serve as a key source of liquidity. Thus, their expanding essentially supply is a key indicator of investor demand and overall health of the crypto market space. After a period of tepid essentially action in December and early January, USDT and USDC growth accelerated in the past weeks, and data shows that previous growth sprouts such as between late October and early December and October 2023 to April 2024 coincided with steep rallies in Bitcoins and altcoin prices, accelerating stablecoin growth. While it's only one of the factors influencing crypto markets, offers essentially a positive signal for the overall market health and aimed essentially macro headwinds and consolidating prices. Now, going back to essentially what one person said, and I think it was one member of the CMF said, Johnny Bravo, that's what it was. Johnny Bravo said, going back to what he said, essentially, Miles, I'm hearing a lot of noise about Black Swan. It's likely or is not possible. One particular Black Swan event that some people are talking about inside the crypto space as a possibility of happening is USDT going under. If USDT goes under, then it'll definitely have repercussions inside the crypto space, because a lot of crypto projects are backed pretty much as a pair by USDT, which is going to have a lot of impact on it. So if USDT goes down, pretty much the majority of the crypto space goes down with it. But it'll be an excellent way to buy everything cheap one last time before the institutions jump in when the regulations coming, utility starts kicking in. So one other essentially outcome for that whole Black Swan event is that USDT goes under, because USDT is kicked out of the EU, which I said a long time ago is going to be happening. And I said when USDT gets kicked out of the EU, most G20 countries will probably follow its footsteps, or all G20 countries will follow essentially EU footsteps. Due to what the essential declaration was signed and the New Delhi essentially G20 summit, the G20 countries all came together and signed an agreement to be under the same sets of rules and regulations. Fast forwarding to the essentially EU regulations on the MICA, where they kicked out USDT due to not being transparent with them. But in general, if Tether is kicked out of the EU, it means it's an indication that the rest of the G20 countries will follow in suit. And then you fast forward again to the United States presidency, Donald Trump, and when they come out with a Genius Act, when they essentially stated that inside the Genius Act, it shows that if you want to be a stablecoin in the United States, you need to have some sort of headquarters inside the United States. You need to show full transparency to the United States in terms of being audited by the United States, not by some random auditors, which again, Tether is going to struggle on, which means Tether is not going to be operating in essentially in the United States once the Genius Act gets passed again. Once the Genius Act essentially gets passed. And going back to the whole New Delhi summit, G20 summit that happened, when they all signed a declaration of G20 countries to be on the same sets of rules when it comes to cryptocurrencies, and each country can have some minor differences in terms of regulations, but the majority of regulations have to be pretty much exactly spot on. After that, about a month later, bank governors from all the G20 countries met up in Marrakesh, so in other words, Morocco, and they signed another agreement to be under the same sets of rules and regulations in terms of the banking field. Which again, you fast forward to today, where Tether is now Tether is starting to show signs of distress and signs of struggling, essentially. Now, the two outcomes of Tether is, one outcome is that Tether gets phased out, where another stablecoin starts replacing Tether inside the market space, which is what's happening already with essentially USDC, which the numbers are showing, or essentially RLUSD, which is always fully audited, which is Ripple stablecoin. The second outcome for Tether is that it just gets audited, and it shows that they're not really holding the assets they claim in terms of bonds and treasury yields and the cash they're supposed to have, or the gold they're supposed to have to back their USDT. So that's the second outcome for USDT, where it just comes out they don't really have the backing they claim to have, and it could have an impact on the market space, which can cause a Black Swan event, because it's number one stablecoin with a pair to pretty much everything. Because what's inside essentially Bitcoin or any other cryptocurrency that's backed as a pair with USDT, because the most simplest way to put it is people use fiat, which is dollars, pounds, or euros, or any other currency that you may have in your jurisdictions, to buy USDT, for example, stablecoin. And then they use that stablecoin as a pair to buy Bitcoin. So what's actually holding Bitcoin together is USDT, for example, where USDT is claiming to have US Treasury bonds and yields and essentially fiat inside of them, cash reserves inside of them, gold reserves inside of them, and so on. And when the data is revealed that USDT doesn't have the backings it claims to have, that's going to cause a lot of implications or major repercussions and major ripple effects inside the market space. So if you ever wondered to yourself, what's actually backing Bitcoin, what's backing all these crypto projects, up to a certain extent, it is USDT. And if it comes out that USDT is lying about their reserves, that's going to cause some ripple effects inside the market space, because you take your hard-earned money, your fiat, pounds, euros, or dollars, and you go and buy USDT, and you use that USDT as a pair to buy Bitcoin. So what's actually backing Bitcoin is USDT. And USDT is pretty much backed by, in their words, US Treasury bonds, gold reserves, cash reserves, and some other reserves. If they don't have those reserves and they're just lying to everybody, that's going to cause ripple effects inside the market space, which will cause a Black Swan event. But the market space isn't just filled with USDT, it also has USDC, so it wouldn't be causing that much of an essentially effect, but it will cause some sort of an effect, definitely. So two outcomes on Tether. One, it gets faded out, which wouldn't cause market disturbance. It will just get faded out, and then another stable coin will take its place. And that's okay. But if it doesn't get faded out, and instead it comes out they don't have reserves, that's going to cause repercussions. Now, on another topic of a event that could cause turbulence inside the market space is Iran. Iran is having some other issues going on with the United States. That's the next thing we're going to talk about on tonight's live, because war scenarios definitely cause turbulence inside the market space. We've seen that happen over and over again with the Ukraine war, or the Israel war, or the Syrian war, or so on and so on. Or when China decided to, go after Taiwan, but then they changed their mind last second. All of those scenarios caused major turbulence inside the crypto space. And another scenario that's coming up once again on the news is Iran, but this time versus the US. That's going to cause some turbulence inside the market space. But before we go through that news, let's go inside the comment section next. Let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. Now, let's go inside the comment section, see what's going on. Let's see where you're at. George, good to see you. So how you doing? How you been? If only Sir Alan would apply to run British politics. Sir Alan is good as well to run British politics. I agree with that. Also, I agree with the other one, Peter Jones. He's a good candidate as well. Good day, Miles. Good to see you on, Mike. How you doing? Hi, Miles, and good evening to everyone inside of CMF. Adi, good to see you. How you doing? How you been? Happy Pisces. Good to see you. How you doing? How you been? Miles, did you hear someone linked to Gary Gensler was trying to get on the ball, but the name of him will come out tonight or tomorrow? I haven't heard about it. I'll be honest. No, I'll look into it. Happy Pisces. Good to see you. How you doing? How you been? What a fantastic time to be on crypto. Sol, HBAR, XRP, XLM. Let's go eat. Hello, Miles and CMF. Good to see you as well. Peg, how you doing? How you been? Greetings, Miles of CMF. Good to see you as well. Ray, how you doing? How you been? Hello, CMF. Tony, good to see you as well. How you doing? How you been, brother? Even Miles of CMF. Joe, good to see you as well. How you doing? How you been? Miles, how do stablecoins make money? Stablecoins make money in terms of transactions. The fees. Now, Iran. Iran is going through some situations with the US right now, where the US obviously is imposing tariffs on every country. Everybody's heard about this. The US imposed tariffs on Canada. The crypto market became volatile. But once again, let me just say these things before I go on any further. I agree with tariffs 100%, and I'm always in favor of Trump. And I've always said, thank God Trump won. And I'll stand by that till the day I die. Thank God Trump won, and I stand by tariffs as well. Now, going in. We saw how the market essentially caused short-term volatility when essentially Trump tariffed Canada. And I said it wouldn't last more than 48 hours, which it didn't. And then I said, then Trump essentially decided to tariff Mexico at the exact same time, which caused some more market turbulence, which again didn't last for more than 48 hours, because every country will cave into Trump's policies. It's just bound to happen. No country is as powerful as the United States, even if they pretend to be one. And it's shown signs of that again and again and again. When Russia essentially decided to, not create a BRICS currency and completely go against BRICS, or when India decided to not create a BRICS currency and go completely against BRICS, and then just pretty much leaves China by itself, because South Africa is also getting tariffed 100%. So every country who decides to go against the US is a losing battle. But Iran's situation is quite unique, because Iran could cause quite a lot of turbulence in the Middle East, which could cause a lot of wars, a lot of chain reaction wars, which can again have impact on the crypto market space. Because unfortunately, even though people give the title of digital gold to Bitcoin, unfortunately, Bitcoin doesn't react like gold. It just never did, and it never will by the looks of it. Because as I said previously, if anything should be given the title of digital gold, it should react like gold. For example, if Iran starts a war very soon by the looks of it, Bitcoin is going to go down in price and gold will go up in price, which is why I've always said you should not be given the title of digital gold to Bitcoin when it doesn't react like gold. It's very simple. If two countries go into war tonight, Simplest way to put it. If two countries go into war tonight, for example, China and Taiwan go to war tonight, gold, actual gold, will go up in price. Bitcoin, with the title of digital gold, will go down when real gold goes up. You see how things work? So, and unfortunately, because we still don't have regulations, which means we don't have utility, which means the crypto market space will follow Bitcoin's footsteps. So when there's a war scenario, Bitcoin will get, shaken from its top place and start climbing downwards, which the rest of crypto market space will follow, because we still have regulations and no utility, which means we're bound to follow Bitcoin's footsteps just for the time being until we get regulations coming, utility comes in as well. Now, Iran is... So America has told every country what to do, but America is putting the most strictest rules on Iran's government because they want to get rid of Iran's government. You take control, it's very simple. You take control of Iran, you control the Middle East. That's just how it works. You get control of Iran, you get to control the Middle East. And they want that. America wants to replace the Iranian government. They want to replace the Iranian government with the royal family of Iran. The Shah wants to come back. Now, America, or Donald Trump, imposed extreme, essentially, rules on Iran, extreme rules on Iran. But he did it on purpose. And I'm in favor of Donald Trump. And by the way, if you watch this for the first time ever, I'm Persian, so I'm Iranian myself. I'm Persian. And I'm in favor of Donald Trump. I want the Iranian government to go as well. But putting that to one side, Iran has rejected every single regulation from Donald Trump today. So an announcement came out from Iran today that they've rejected everything Donald Trump has said to them. Donald Trump set out 12 policies for Iran to follow, 12 policies for Iran to follow. And Iran today came out and said, no, we're going against Donald Trump. We're going against everything he has to stand for. We're going against the US. We're going against everyone. Now, that's going to cause turbulence. But here's the thing. There's two ways this could go. Either it's going to be a domestic type of operation in Iran, where it shouldn't cause too much market turbulence on the stock market or crypto market scene, or it's going to be an international type of situation where it could cause some market volatility on the crypto space. It could cause, quite a huge amount of volatile space or some volatile space. But in general, domestic version, if it happens, if it's from within Iran, they try to overthrow the government from within Iran, then it shouldn't impact the crypto market space too much. But if Iran tries to stir things up and try to do an international type of situation, then we're definitely going to see the repercussions on the crypto market space, where we're going to see crypto markets get volatile and start going down, and Bitcoin starts going down with the rest of the market space, and then gold, obviously, as a reserve asset, as a real risk-off asset, will go up. So that's pretty much something you should know about, because that is what's going on right now. Iran is standing firm in front of the United States, which, by the way, Donald Trump wanted Iran to reject Trump's plans because Trump wants to replace the Iranian government. And I'm fully in favor of that. So are a lot of Persians around the world. So here it is. Iran's bold stance, no negotiations with the United States, they said. They said we rejected, because the Iranian government said what Trump is trying to do is replace the Iranian government, which is exactly what he's trying to do, and I'm so in favor of it. But here's the thing. The BRICS continue to redefine the global geopolitical landscape. As the group expands and seeks to strengthen its influence, its relations with the West are becoming strained. The latest episode is this. Iran, the newest member of the bloc, essentially has rejected any negotiations with the United States. Negotiating with America solves none of our problems, said Iran. This is essentially a firm refusal of any diplomatic openings with Washington. This positioning, much more than a simple political statement, illustrates a growing rift between the BRICS nations and Western powers. And by the way, regarding the BRICS nations, Russia and essentially India already pretty much trying to leave BRICS. The Iranian government has taken a resolute stance. It asserts its absolute refusal of any discussions with the United States under the presidency of Donald Trump. Through essentially this statement, Iran has expressed a desire to put an end to any attempt at dialogue with Washington, which it considers a hostile and ineffective actor in the resolution of its economic and political challenges. This rejection occurs in a context where Iran seeks to reinforce its diplomatic and economic autonomy through support from its new BRICS partners. So Iran is trying to pretend they're strong by relying on BRICS nations, which is Russia, India, China, and Brazil and South Africa. Unfortunately, Russia has decided to already distance itself slowly from BRICS. So has India, which just pretty much leaves the only powerhouse left, which is China, which is the only one standing behind Iran. But China is very flaky. They'll also flake against Iran too. Now, thus, the country sees its alliance as a means, essentially, to Western sanctions and align itself with emerging powers that share a multipolar vision of the world, where essentially they're all going against the US, but again, they're not. Iran is not just refusing dialogue with the United States, it is actively engaging in policies, essentially, with its new allies within the BRICS. This integration aims to diversify its economic partners and reduce its dependency on the US dollars by assorting itself into alternative financial mechanisms supported by the bloc. Now, another situation that's arising is that Iran is about, in their words, weeks away from nuclear power. So Iran is weeks away from nuclear power. And the Iranian government, one part of the Iranian government, are absolute nut jobs. No doubt about it. One part of the Iranian government are absolute nut jobs, which means if the Iranian government does reach within weeks, in their words, or days, regarding nuclear power, they're definitely going to use it, which will cause massive repercussions on the crypto market space and the stock market if Iran decides to use nuclear power. And once again, one part of the Iranian government are absolute nut jobs, so there's no doubt about it, they might use it, which is why essentially this regarding the US is trying to ramp things up to replace the Iranian government as soon as possible. Because if they don't, and Iran does reach nuclear power, they're definitely going to use it. Now, this integration aims to diversify its economic partners and reduces dependency on the US dollars by assorting itself as an alternative financial mechanism supported by the bloc. The implementations of this positioning are significant. On one hand, it strengthens the de-dollarization dynamic championed by BRICS, which seeks to free themselves from the American monetary homology. On the other hand, it essentially the polarization between this group on emerging nations and the West, making any mediation on international issues where Iran is a key player even more difficult. This categorical rejection of negotiations with Washington illustrates this consolidation of an alternative access to Western dominance. Through its integration into the BRICS, Iran is no longer seeking to negotiate essentially relaxations, but rather to reshuffle the cards of global economic and diplomatic powers. This strategy could well reshape international power dynamics and manage essentially with major consequences for trade, finance, and global diplomatic balances, and even war. So, if you are looking to buy things cheaper inside the crypto market space, well, if Iran gets close to nuclear power, which in their words, they're weeks away or days away, then they're definitely going to use it. So if Iran uses nuclear power in any sort of a way, that's going to cause major, essentially, repercussions in the market space. If they're crazy enough to use it, is essentially the question we should be asking. If they're genuinely crazy enough to use it, which I know, not I know, but as in one part of essentially their thing is one part of the Iranian government are absolute nut jobs, to be fairly honest. So that is why essentially Trump is trying to. Also, it's another reason why Trump has taken Gaza, for example, because they know that Iran. So here's the thing: when Iran announced that, because a lot of people don't know this little part here, which is when Iran announced they're getting weeks away from nuclear power, the exact same day Iran announced that, which was a few days back, was the exact same day later on Trump came out and said that America has control pretty much of Gaza and they're going to rebuild Gaza and so on. So why did essentially that announcement coordinately come out with the one where Iran said they have nuclear power pretty much ready to go, and then America comes out with the news that we have control of Gaza now? It's pretty much because they don't want Iran to strike Israel with nuclear power. They don't want Iran to do that because that could have major repercussions. So what does the US do? Go and occupy Gaza, go and occupy essentially Israel, pretty much. So that's why the US made that announcement. Trump made that announcement pretty much because Iran made the announcement of we have nuclear power within weeks. Straight away, later that day, Trump comes out and goes on the news, we have occupied Gaza pretty much. We're going to rebuild it. So if America's in essentially Israel, it's then Iran decides to strike, that means they've striked America. So they need to think twice about striking Israel. And there's also the part where Gaza has an immense amount of oil, essentially energy resources. There's a lot of reasons why they're doing this. But the coordination of the announcement was interesting because Iran announces we're getting nuclear power. At the exact same time, later that day, Trump announces we've occupied Gaza, to show that America is now in Israel. So if Iran decides to strike in any sort of a way, you're striking the US also. So that is why they're trying to replace the Iranian government ASAP, as soon as possible. And the Iranian government knows that days are numbered. The Iranian government knows that days are numbered. The Shah of Iran is ready to take control of Iran. All of this is going to be happening anyways. But here's the thing. That is going to cause market turbulence, depending on how Iran moves forward from now on. Is Iran going to go internationally ballistic, or is Iran, getting to get changed domestically from inside, like how it happened when they replaced the Shah the first time around, whereas from within the country fell through. So we will have to see how that plans out, but that's definitely going to have some repercussions inside the market space. If you're looking to buy things cheaper, for example, inside the market space, inside the crypto space, you're looking for that, extra juicy discount on certain crypto projects. Well, if that war scenario happens, we're definitely going to see some discounts inside the crypto space. Depends though, as I said, if it's domestic essentially scenario where it's from within Iran, essentially the regime falls and the king, the royal family of Iran come and take his place, then that shouldn't have so much repercussions on the market space. But if Iran goes absolutely crazy and starts to go internationally basis, then that will have major effects on the market space. Now, it's just something you should know about regarding timelines, regarding what's actually happening in that scenario, because war has a major effect on every market space. Major effect on every market space. And that's one big one coming up pretty much. Now, JP Morgan discloses essentially Bitcoin's exposure despite CEO's public criticism is what we're going to talk about next. But before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions, put it down inside the comment section. I'll be more than happy to answer any questions you may have. So let's go inside the comment section first, and then we go straight to JP Morgan's news. But yeah, once again, no, that could also cause some sort of a swan event as well, depending on how drastic it is. So let's see where we were at. We were at well said, Miles. Totally agree. Let's go eat. Golden Dragon, good to see you. How you doing? Share the live. Let's go, Scott. Miles, I missed your comment on ether.fi. Ether.fi. You mean wrapped ether, or do you mean ether in general, or you mean the Trump project? Scott, direct message me. Direct message me. Now, take a look and get back to you. I said to get back to your previous messages as well, but direct message to me. I'll take a look at it and get back to you. No problem. Now, JP Morgan. JP Morgan discloses Bitcoin's exposure despite essentially being against Bitcoin. JP Morgan's CEO has publicly criticized Bitcoin multiple times, back to back. They've essentially said Bitcoin shouldn't exist. This is what JP Morgan's CEO has said. JP Morgan's CEO essentially has said in the past that Bitcoin should not exist. Jamie Dimon has said that Bitcoin should not exist. Bitcoin is used by criminals. Bitcoin is used by illicit activities. Bitcoin is used for money laundering, and so on and so on and so on. Now, it still does show in the newest filings that JP Morgan, who is a massive critic of Bitcoin, is still holding on to Bitcoin. So here it is. JP Morgan Chase, one of the world's largest banks, reported holding Bitcoin exposure in its recent 13F filings with the SEC. You see, every company can lie, for example, and say they don't hold certain crypto projects, or they're against cryptocurrencies and so on. But you know what doesn't lie? When they start filing in for their 13F filings. From these 13F filings that we're going to hear more of essentially during these weeks, we're going to find out which companies around the world, or sorry, which companies inside the United States are holding essentially cryptocurrencies. Also, which companies around the world that are holding essentially Bitcoin ETFs or Ethereum ETFs or something related to American assets, who are also filing for 13F for the SEC. These are public records that we get to see with our own eyes of which companies actually hold cryptocurrencies, even though some companies don't still like to talk about some assets. So, however, the disclosure is notable because The position, valued at approximately $500,000 worth of Bitcoin, is what JP Morgan is holding for particular clients. However, the disclosure is notable given CEO Jamie Dimon's long-standing skepticism towards Bitcoin. In a January interview, for example, Jamie Dimon stated that he did not feel great about Bitcoin, citing concerns over illegal activities like money laundering. Jamie Dimon's criticism of Bitcoin dates back to 2017, when he labeled it as fraud and threatened to fire employees trading it. Over time, his stance has softened slightly, while essentially he continues to compare Bitcoin to cigarettes. Acknowledging client demand despite personal disapproval, the bank has taken measures essentially towards stepping down. Regarding crypto, essentially down. In 2021, JP Morgan allowed clients to access cryptocurrency funds, a decision seen as supportive of the industry. The bank's current Bitcoin exposure stems from its role as an unauthorized participant for authorized participant for spot Bitcoin ETFs. This responsibility requires JP Morgan to assist ETF issuers in creating and redeeming shares and functions rather than a direct investment. The filing does not indicate a shift in the bank's essentially overall strategy, but it contrasts with Goldman Sachs' disclosed $2.3 billion in Bitcoin exposure that happened earlier this year as well, reflecting a more assorted approach. JP Morgan's disclosure as a sign of institutional acknowledgement, even if it is minimal. The bank's participation in ETF mechanisms pretty much suggests operational, essentially adaptation to client needs despite leadership skepticism. Meanwhile, Jamie Dimon's tempered theoretic from the essentially outright hostility to the tolerance and mirrors broader institutional trends. Major financial firms increasingly engage with cryptocurrency infrastructure while balancing regulatory risk ahead as well. So we're going to hear a lot more 13F filings coming in from the SEC, all public records of which companies actually hold crypto assets and which don't, which is good to see, because a lot of CEOs criticize certain crypto assets or cryptocurrencies in general, but in reality, their companies are holding it. Now, what I've heard inside the crypto space, especially from jurisdictions around the world, is pension funds that went towards essentially cryptocurrencies. I've heard pension funds in America that went towards essentially Bitcoin, for example. I've heard pension funds in Japan on paper. All these are documentations on paper. I've heard pension funds in Japan go towards essentially Bitcoin, for example, or the ETFs. I've heard about one of the biggest private pension funds in South Korea who's into Coinbase shares and also into essentially Bitcoin allocations in terms of ETFs and so on. And there's a lot of pension funds around the world that are going towards Bitcoin and so on. But what I've never heard, American states applying for a crypto stockpile, 21 American states have applied for crypto stockpiles. But what I've never heard is this one. Wyoming's Highway Patrol may soon hold Bitcoin. The state of Wyoming could expand its pro-Bitcoin agenda while local authorities assess stablecoin issuance and reserve laws. The Wyoming Highway Patrol Association has adopted the Get Off Zero initiative by Proof of Workforce, a non-profit entity focused on Bitcoin education, adoption for workers, unions, pensions, and other factors. By essentially aborting the program, the association could become the first state law enforcement labor union to hold Bitcoin on its balance sheets. While it remains unclear how much Bitcoin the Wyoming Highway Patrol Association may accumulate, this decision signals a growing crypto interest within the states. In January, Wyoming lawmakers introduced a bill to propose and to allocate 3% of the state's sovereign funds to Bitcoin, effectively essentially creating a state Bitcoin reserve. Authorities in essentially the states also published job listings for blockchain developers ahead of stablecoin plans, led by the Stablecoin Token Commission, one of the first US jurisdictions to establish a dedicated essentially stablecoin oversight body. Wyoming has been at the forefront of Web3 related legislative milestones, and the state has standardized laws regarding decentralized autonomous organizations and officially recognized DAOs as legal entities. Many industry leaders, including Anderson Howard's A16Z in other words, hailed the move as a crucial step towards clarifying DAO treatments in the courts and regulatory frameworks. Wyoming has also passed laws to protect crypto private keys, while its Senator essentially Cynthia Luminous lobbied for federal BTC reserves and scrutinized the federal essentially deposit insurance corporations over crypto debanking. So Wyoming's essentially highway patrol is also going towards Bitcoin funds. I mean, the list of organizations that are going towards some sort of crypto-related projects, some sort of crypto-related essentially backings, is interesting to see. First, we had essentially companies doing stockpiles of cryptocurrencies. Then we had pension funds going towards cryptocurrencies. Then we have American states going towards cryptocurrencies. Then we have essentially companies also going towards blockchain-related stocks like Coinbase shares. And now also the Wyoming Patrol Highway. Now, I've talked about the SEC Commissioner Hester Peirce before, how she's did multiple interviews, talked about what she's doing with the crypto task force, what she could possibly be implementing. I talked about her yesterday's on day before regarding essentially, they're waiting for Paul Atkins, but if Paul Atkins doesn't get ruled in very quick enough, then the SEC is still working as it should be. Mark, the acting chairman, Hester Peirce, the person in charge of the crypto task force, they're doing the best they can, she said. They're still going to move ahead. They're still going to be working no matter what, even if Paul Atkins still hasn't taken his seat. Now, they said any major decisions, Paul Atkins maybe will have to choose to, for the agenda of the SEC moving forward, but they still can make decisions on his behalf before he is essentially voted in, because the acting chairman, Mark, is still in position. Now, I have a breakdown bullet point of Hester Peirce's newest 10-point plan. So if you're wondering to yourself, what is the SEC's next movements? Why is the SEC taking this time? Why is it moving so slow? What are their next footsteps inside the crypto space? Well, here it is. SEC Commissioner Hester Peirce has proposed essentially a 10-point plan to overhaul crypto regulations in the United States, recognizing the complexities of issue. And here is her plan. Defining securities is number one on her list. What is a security is number one on the list. And I believe so it should be 100%, because the whole Gary Gensler fiasco was pretty much everything is a security, but nobody could say what is a security. That's why every judge struggled, or every judge gave different opinions regarding securities, because we didn't have a defining law. They relied on something called the Howey test, which was incredibly irreliable because many judges were confused on the Howey test. And Gary Gensler was the only one imposing on it and saying, yes, this is the way to do it. And he was trying to apply laws that didn't involve crypto assets in them, but somehow he was trying to say, well, they still do apply to that, which caused massive essential confusion, which caused the Ripple case situation, caused the Coinbase situation, the Binance situation, the Kraken situation, the Crypto.com situation, where they're all selling unregistered securities, but nobody from the SEC could say what is a security in that sense, or in that context. So defining securities is pretty much number one on our list. Clarifying the definition of digital assets as a security using modern frameworks, not what Gary Gensler was using from the 1980s, rather than the outdated Howey test. So Hester Peirce from the Crypto Task Force, as an SEC commissioner, has said we're no longer using the Howey test. The Howey test is never going to be used ever again to define any crypto asset. And instead, they're going to define crypto assets by using modern frameworks that they're working on, which is great to see. No more Howey test. Jurisdictional clarity is next on the page, which is defining the SEC's regulatory boundaries and encouraging no action letter requests for projects outside its scope, particularly DeFi and utility coins. One of the issues with the SEC was that Gary Gensler went beyond his boundaries and even made up laws, and even taught his lawyers, you could pretty much say, to make up scenarios in court scenes. Hence why the SEC had to pay a massive fine once against debit books, because two lawyers as SEC commissioners went and sued debit books and told the judge they're stealing money, they're sending money abroad, and so on and so on. And when the judge froze the bank accounts for debit books and said to the SEC, essentially lawyers, now show us your proof, they said, you want proof? What proof? Which ended up with the SEC department that handled those two lawyers closing down, their files being sent to another SEC department. Those two lawyers were fired, and the SEC had to pay a massive fine because Gary Gensler went around and pretty much lied as much as he could and went beyond what he's supposed to do. So none of that is ever going to be happening inside the SEC ever again, where the SEC is going to draw a line of what to do and what to never do. Safe harbor for token offerings. Creating a temporarily safe harbor for for token launches, allowing them to operate as non-securities initially. So if any crypto project is going to be coming out very soon, for example, ICO crypto project, which 99% pretty much fail, but let's just say there's a genuine ICO crypto project coming out. Someone's launching a startup blockchain company, for example. When they first initially come out, they're non-securities automatically. Any crypto project that's about to be launched now is non-security automatically. None of them are considered securities. And initially, essentially, provided they meet disclosure of essential requirements and agree not to contest fraud jurisdictions. So that's great to see. Automatically, any crypto project being released now is a non-security. Revising token offerings, unlike Gary Gensler, who just said everything is a security. Revising token offering registrations is the next step she's taken. Making existing token offerings registration process, Regulation A and crowdfunding more practical for crypto projects. One of the other major issues for the crypto essentially space was that the SEC, what Gary Gensler would say to crypto companies on the news, for example, in front of the judges, would say, we welcome crypto projects. We welcome crypto projects to come to the SEC and register themselves. Gary Gensler will go on Bloomberg, for example, on CNN, for example, any news channel and say, crypto companies are fraud. They don't want to be audited. They don't want to be registered with the SEC, and they want to do whatever they want, which in fact was a complete load of BS. Crypto companies many times attempted to have some sort of a conversation with the SEC, where the SEC would welcome them in, and when they leave, they get a Wells notice. Where Ripple had a conversation with the SEC and they left, and they got a Wells notice. Kraken got a Wells notice. Crypto.com got a Wells notice. Coinbase got a Wells notice. Even though the SEC says, we're welcoming everyone in with open arms. That was the essentially the past SEC. The new SEC is no longer doing that BS where they welcome you in for no apparent reason and they try to sue you straight after when you leave. The new SEC is going to have some sort of process in place where you can register your company as a blockchain company with the SEC, and you're actually going to be welcomed in with open arms. None of that other BS. Expanding special purpose broker deals rule, allowing essentially broker deals to custody both security and non-security crypto assets is also a priority for them. Custody rules for investment advisors, establishing clear custody rules for investment advisors handling crypto assets. So this is something that, for example, companies like Ripple are doing, where they're creating some sort of a custody service, institutional custody service, to be fairly honest, high grade with Metico, essentially, and HSBC Bank and IBM and so on, where this is going to be allowed in America from now on, where the SEC is looking into some sort of regulation purposes for, high grade custody services for essentially investment advisors, for institutions, and so on. This is great to see, because the more we go into essentially this regulation stage and utility stage, this is going to be a key player regarding, holding people's assets safe in terms of institutional basis, because banks and institutions want to be involved inside the crypto sector, and regulations like this is good. That means no more essentially gray areas. Clarity on lending and staking is also a big issue when it came to Gary Gensler, where Gary Gensler said, if you're doing staking, then you're a security automatically, which is also a load of BS. So providing legal guidance on whether and how crypto lending and staking programs are regulated under security laws. So providing some sort of guidance. So if you do this and this and this, then you may be considered security. If you do this and this and this under staking, you're not considered security, for example. Clarity essentially also on improving crypto ETP approvals. Gary Gensler struggled with approving essentially any crypto projects in terms of ETFs when it came to altcoins. Gary Gensler was forced by the Grayscale case to approve Bitcoin ETFs. Gary Gensler was forced by Congress to approve Ethereum ETFs. And he didn't even bother looking at the rest of the altcoin, essentially ETFs. He just pretty much didn't even acknowledge them, which is something they're working on heavily more inside the SEC now. So regarding streamlining the approval process for crypto ETPs and ETFs, and also including and allowing staking and in-kind creations and redemptions. So the Ethereum ETF was supposed to have staking capabilities, but Gary Gensler said, if you add staking capabilities to the Ethereum ETFs, I'm going to reject it because that's a security and we can't do that. So every essentially filing for an Ethereum ETF, they had to remove staking. But now ETFs can have staking. Now, why is that good? Because that's the only thing Ethereum brought to the table, believe it or not. Bitcoin, what it brings to the table was limited supply as a Bitcoin ETF. So institutions thought, well, it has limited supply and the value is going up. We can use it as a reserve in the stockpile. That's what Bitcoin, essentially, that's the benefit of Bitcoin for them, for all the institutions that brought into Bitcoin ETFs. It has limited supply. So they love the idea of that. Ethereum's essentially, benefit was staking. But unfortunately, it wasn't allowed to have staking. So when Ethereum ETFs came out, it didn't get the much appreciated love that Bitcoin ETFs got from institutions, because institutions thought to themselves, why buy Ethereum ETFs when we can just buy Bitcoin ETFs that's limited supply? It made no sense for them to buy Ethereum ETFs. However, if Ethereum ETFs offered staking capabilities, that was something new. They can buy Ethereum ETFs and stake it and earn on top of it. That could have brought a lot more purchases for Ethereum. That's why Ethereum ETFs didn't do well at all, to be pretty much honest. But because of this new law that's going to be passing essentially with the SEC, those are regulations and policies, we're going to get a lot more refilings from all the Ethereum ETFs. BlackRock, everybody that has essentially Ethereum ETF is going to refile again with staking capabilities to add something to Ethereum. So when institutions, it makes them essentially, interested going towards Ethereum ETFs because they can earn more money on top of it. Blockchain essentially in traditional securities markets, examining how blockchain can be integrated in traditional securities markets and updating relative essentially rules. And global, this one's very important, a global regulatory sandbox, creating a cross-border regulatory sandbox for crypto projects. A digital sandbox, essentially every jurisdiction around the world pretty much has their own versions of a digital sandbox. Some jurisdictions still don't have, but some jurisdictions do have a digital sandbox. A digital sandbox is where blockchain projects will test out their projects in a digital sandbox for that. Essentially, for example, the United Kingdom. The United Kingdom has a digital sandbox where they test out blockchain projects, and institutions and banks get to see which project reacts the best, essentially, to all the testings, and then they choose, okay, we'll choose this one for this type of category, for this one, for that type of category, and so on. So they have an understanding of how these blockchains function. The EU has their own, essentially, digital sandbox. Russia has a digital sandbox. China has their own digital sandbox. Every jurisdiction pretty much has some version of a digital sandbox. Some still don't, but the majority do now. And what the SEC is coming out and saying is that we should have a global digital sandbox. Forget about everybody has their own version of a digital sandbox. We should have one global digital sandbox where blockchain projects will come and test their projects inside of that global digital sandbox. And everybody, and essentially, in the simplest way, every country can have a look and say, okay, this project can work for all of us. Instead of everybody doing tests one by one, they just do tests together. So every, for example, G20 country will have one digital global sandbox where everybody gets to do tests. So Ripple could do their testings in that global digital sandbox and everybody can see and go, okay, let's do it, for example. Instead of one by one testings and taking time and effort and money and resources, which makes a lot more sense. Legal experts emphasize that while the SEC enforces security laws, the courts ultimately determine the legal definitions and boundaries of these laws. Now, moving on essentially from what Hester Peirce has pinpointed on her 10-step roadmap for the SEC to be fully fixed, which all her plans are incredibly important to be implemented. All of our plans essentially are incredibly important to be implemented. They're going to have major effects on the banking stage, and they're going to have major effects essentially on the financial stage in terms of payments for cross-border payments, domestic payments, international payments, and so on. And holding crypto assets for institutions and banks, everything is going to be laid out by Hester Peirce. It's all in her 10-point step, essentially. So if you want to know what the SEC's next steps are, that's what the SEC's next steps are. Now, what we're going to talk about next is Paris. There's a Paris blockchain event coming up where they're going to be announcing some new things inside the blockchain sector. And the people that are attending this Paris blockchain event, and this is the 6th blockchain event that's happening in Paris. It's going to be essentially CEOs, executive board members, investors, high-profile essentially members attending this event, talking about the blockchain space and what's going to be happening next inside of this scene. So here it is. The Paris Blockchain Week, Europe's flagship Web3 event, where essentially business happens. With over 85 countries attending this event. 85 countries are attending the Paris Blockchain event. It has unveiled essentially its first headline speakers for 2025. Delegates will be treated to talks from Anthony, for example, the Skybridge essentially CEO, Charles Hopkins, the founder essentially of Cardano, and essentially Crypto.com's essentially members are going to be there. Many of the blockchain essentially CEOs and executives are going to be there. They're all going to be speaking on this stage event. 85 countries are going to be there essentially attending this. Hosted at the Carousel Louvre, essentially, and PBW will gather Web3 leaders, developers, and investors for 3 days of talks, workshops, and networking. Topics will range from ETFs, AI, and DeFi to take the future of tokenizations and Web3 gaming, with events tailored for blockchain commodities like Bitcoin or dollars. And also PBW co-founder Michael, essentially, he said, we are proud to announce the 6th edition of Paris Blockchain Week in 2025, where we will bring together the foremost leaders and innovators in the blockchain industry. This event has established itself as a premier meeting point for industry leaders around the world to meet up, meaningful business interactions, and shaping the future of blockchain together. As we prepare for the next edition, our focus remains essentially on creating an environment that unites the brightest minds and most influential voices to drive essentially growth in this sector and foster innovation and advance the blockchain ecosystem in general. The PBW 2005 Paris Blockchain Week will feature a startup competition investor day and Hackathon essentially investor day. The Hackathon will feature both online and in-person challenges, giving developers, entrepreneurs, and blockchain enthusiasts a chance to showcase their skills, innovate, and create solutions that advance the industry. Additionally, an unparalleled VIP dinner beneath the breathtaking Private Louvre, and with an exclusive private essentially viewing of the masterpiece essentially in Wing. Now, Slaughter and Block, the premier setup competition for Web3 projects, entrepreneurs, and investors, with a prize of a fund of 10 million euros essentially as well. The competition spotlights innovates projects with real-world impacts as key essentially part of Investor Day. Slaughter and Block offers valuable opportunities to connect with investors, explore trends, and discuss potential deals through panel discussions on fundraising, equity, tokens, and commodity, essentially community buildings. Karina, the essentially general manager of emerging technologies of Shell, the oil company Shell, is also going to be attending this event. The list of companies that's going to be essentially attending the Paris Blockchain Business Week is immense. First of all, 85 countries are attending this event. And then the list of companies, CEOs, executives, and board members is incredible. And Shell is also going to be at this event doing a speech. She said Paris Blockchain Week is a real essentially force, a magnet that helps to bring the right people together to accelerate the use of the tech and the changes we essentially make together. We need to make together. Tim Dapper, the founding and managing partner of essentially Dapper Associates and Dapper Ventures Network, said it's an amazing conference. Everyone across the world should be here so that they essentially understand that this world is going to look like this going ahead in terms of a digital future. And this is the future of currency, governance, art, literature, and the economy and the economy in general. And Paris Blockchain Week is absolutely extraordinary. With hundreds of crypto companies and VIP speakers from both blockchain and traditional finance, PBW 2025 is set to be the largest yet, bringing together key figures for insightful discussions, networking, and vibrant side events in Paris. So there's a major event happening in Paris in terms of a blockchain week. 85 countries, mega essentially CEOs, executive board members, even oil companies are attending essentially this event, doing some sort of speeches for blockchain and saying to everyone, this is where the future is headed. Now, what we're going to be talking about next, moving on from the Paris blockchain event, and if anything essentially does come out from this event, when it does come up, and some announcements do get made, definitely tune into this live because I'll essentially 100% be updating everybody on any sort of announcements coming from this Paris blockchain event that's coming up. Now, Ripple is what we're going to talk about next. Ripple is unlocking a new fintech revenue stream for digital asset custodies. So Ripple does a lot of blog posts on their own website, and they talk about essentially tokenization. They talk about the domestic payments, international payments. They talk about essentially how small and medium-sized businesses don't get involved in essentially Swift platforms due to high essentially pricings and so on. They talk about a lot of factors inside the financial sector. One of the things they essentially released on their own website today was this: Ripple unlocking a new fintech revenue streams with digital asset custodies. So here it is. From digital essentially wallets to real-time cross-border payments, fintechs and neobanks, fintechs essentially and neobanks have helped modernize finance, setting new standards for innovation and reshaping expectations for financial services. Now, with 10% of the global asset forecast to be digital by 2030, fintechs have a new opportunity: institutional digital asset custody. Many fintechs are already responding to the rising demand for more secure, compliant storage of digital assets. For those seeking to capitalize on this opportunity, Ripple's newest guide provides fintechs with a roadmap for how digital asset custody infrastructure can build trust and create new use cases and fuel growth across fintech, essentially, custody services. The digital asset opportunity for fintechs and neobanks. Digital asset adoption has evolved into an increasingly mainstream component of financial portfolios. Initially driven by retail enthusiasm, the crypto space was definitely initially driven by essentially retail enthusiasm. The market for these assets is now witnessing a rapid institutional adoption. As I said previously, the next clientele entering the crypto space are institutions by a mile. And they're all waiting for regulations to essentially come through the United States so they can jump on the crypto space. I revealed yesterday that Wall Street is pretty much waiting for the regulations to drop so they can enter the crypto space. And today, Ripple comes up pretty much with this, where they're talking about the next institution, the next clientele entering the market space are institutions. And what's the percentage of the institutions entering the market space? Well, according to Ripple, with 96% of institutional stakeholders, 96% of institutional stakeholders are seeing digital assets as an important diversification opportunity. That is a ridiculously high level number of people. Now, this surge in interest is driving the $20 trillion opportunity and making institutional crypto custody a priority, essentially, in terms of strict investment for fintechs. Unlike less agile, essentially traditional providers, fintechs can essentially move swiftly and decisively to meet market demands for institutional crypto custody infrastructure. First movers are eager to leverage flexible, secure storage and management options, including multi-essentially party computation and or essentially hardware, software, security models for private key management that addresses heightened compliance and security requirements for a broad range of digital assets. Ironically, going back to essentially what Hester Pierce said regarding she's establishing some sort of rules and regulations for custody service for institutional purposes. And then you have Ripple talking about how they're pretty much on the same path. Now, versatile, essentially institutional crypto custody solutions for evolving demands. Fintechs must be consistent innovators, offering expanded use cases for an institutional investor and a digitally savvy retail customer base. This progressive mindset is why the industry revenues are predicted to grow essentially nearly 3 times faster than the traditional banking sector. A robust custody solution will be key to this growth as it positions fintechs to serve both a wide range of current client needs and future use cases. Institutional clients, for example, are seeking reliable custody options that provide security and regulatory compliance across complex portfolios. B2B fintechs can meet these essential demands with high-quality custody services tailored to institutional investors, such as banks and regional, essentially financial institutions that allow for AML, compliant asset management, and tokenized assets. The custody service mix might be different for neobanks, essentially catering to the younger customers in emerging markets where secure crypto and essentially ramps and off-ramps is the main priority. Given essentially the end users' needs, the custody essentially service should also deliver on expectations for a user-friendly interference, higher transaction speeds, and connections to liquid markets and multiple protocols. So here is where Ripple essentially comes in. Ripple Custody, which essentially was developed by Metico, essentially, and which Metico is a Ripple company, through Metico, HSBC, and IBM. Just want to point this out. Long time ago, people said Metico doesn't mean Ripple, doesn't mean Ripple. When Ripple brought out Metico, and Metico partnered with HSBC Bank and then partnered with IBM to create a essentially custody service, a lot of people a long time ago said, that's Metico, it has nothing to do with Ripple. And to me, those people just seem like morons, because if I buy a company, now that company belongs to me. It's like when Volkswagen buys Audi, and then you open up, essentially your Audi car, and then the parts inside of it are pretty much Volkswagen parts. It's the most simplest way to put it, pretty much. Ripple, long time ago, brought Metico. Metico partnered with HSBC Bank and partnered with IBM. What did they create? A custody service platform. For what? Institutions. Now that, fast forward to today, is about to be activated pretty much. So, Ripple Custody. Fast forward to Ripple Custody. Ripple Custody is a comprehensive enterprise-grade solution that can support a wide spectrum of customer needs. Its combined digital asset custody service and tokenization infrastructure also enables customizable controls over operating and security models, including flexible deployment or essentially private key management, giving fintechs the ability to bring even more market use cases. And here's a bullet point step: crypto custody and trading for institutional, high net worth and retail clients, structured products with underlying digital assets, issuance and custody of tokenized commodities like gold and other rare metals, retail use cases for tokenization such as NFTs and loyalty essentially reward programs, secure seamless access to decentralized application. By tapping into Ripple's custody, fintechs can unlock new custody service revenue streams and expand their customer offerings without the cost and risk of building an in-house custody solution. So instead of companies, banks, or even the retail section going around and trying to create their own essentially custody service, they can just use Ripple's high-grade and secure custody platform, which, by the way, the SEC is doing regulations for, which was one of the pinpoints of Hester Peirce custody service regulation. Proven essentially purpose, built institutional digital asset custody solutions. Here's essentially the final parts. With digital assets on the rise, fintechs and neobanks have a unique, essentially urgent opening to outpace the competition by offering a new financial service and becoming the partner of choice for all, essentially, customers, crypto bases, and custody and management needs. Ripple Custody has proven to reduce costs, strengthen security, and streamline digital asset management, already trusted to support live commercial custody offerings in more than 20 regulatory jurisdictions today. Ripple already has licensings pretty much in 20 jurisdictions today to provide this custody service at an institutional level. Ripple Custody empowers fintechs to confidently meet evolving client demands, address regulatory compliance requirements, and unlock new revenue streams as reliable custody providers. Institutional clients and retail demand for crypto custody services is steadily rising, and fintechs can capitalize on this growing user base with Ripple Custody. Ripple controlling the financial sector is incredible. Ripple also controlling the sector where you're storing your XRPs essentially for transaction purposes is even better. Now, and ironically, the SEC essentially is doing the Hester Peirce through the crypto task force that was created overnight when Gary Gensler left, is right now pinpointing her 10-step plan, which one of them is regulations for custody services for institutional sector, which is what that is, Ripple Custody. Now, US SEC is what we talk about next regarding XRP ETFs. But before we go through that, let's go start the comment section first. As I said previously, this is live, which means if you do have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. And the next news we are going to be going through is pretty much XRP ETF grayscale announcement tomorrow. What is it going to be? So before we go through that, let's go start the comment section first. Let's see where we were at. Miles, you remain the best source of relative information. E, thanks so much for the kind words, brother. Can I ask all the CMF, what's your opinions on Coinbase's learning platform? Coinbase's learning platform is a great place, I'll be honest with you. It's completely free. It's a free source. If you want to learn about the blockchain sector, why not? I use ChatGPT on a daily basis, almost, and I find Coinbase has a better, easier way of explaining the general questions. Why not? It's free, and it is essentially very simplified regarding using Coinbase to learn about crypto assets. It's a great way to do it. Troy, good to see you. How you doing? How you been? We the best says how much XRP is enough, whatever you can afford. 777 says we need XRP in Mexico. It's available in Mexico, if I'm not mistaken. On Earth Truth says in Singapore, JP Morgan launched their own blockchain with the first green bond tokenization. Look for Project Guardian. I have looked into it. Ripple also has essentially a carbon footprint version of that. But regarding JP Morgan, they also have launched on AVAX, because AVAX has a subnet green version of a carbon net footprint blockchain as well. So in terms of JP Morgan, they also launched a subnet green on AVAX. So does Citibank as well, because they follow JP Morgan's footsteps. But I've seen that, but Ripple has the exact same project going on. Would you agree that, but yeah, on Earth Truth, I know about Project Guardian. I've talked about Project Guardian. I've talked about the other 12 projects as well that the Bank of International Settlements has going on. Would you agree that, well, thank you for the update though. Would you agree that the backbone of multi-use for crypto is ready to roll out? We all use our phones to pay by scanning. Would I agree that the backbone of a multi-use for crypto is ready to roll out? Yes, yes, definitely. They're only waiting for regulations, to be fairly honest. You know, in the past years, we've had so many announcements of partnerships and testings and so on. And we've got to a stage where once the regulations drop, they're pretty much ready to launch off the bat. They're already waiting for regulations. That's the only thing that's holding the crypto space back slightly. It's just regulations. Once the regulations drop, the United States drops regulations, Hong Kong will follow America's footsteps, and so will Singapore, so will Japan, because they already said it. All these jurisdictions around the world said they're just waiting for America's next steps. Whatever America takes as their next step inside of the digital world to aim for a capital hub of cryptocurrencies, that's what their next step is also going to be as well. Now, US SEC could approve, so I would agree, yeah, I would definitely agree. Now, US SEC could approve grayscale XRP ETFs tomorrow. Just want to point this out. 2 days ago, I revealed that Eric and James, who are Bloomberg ETF specialists, they're both analysts, incredible people, incredibly smart people, and their sources are very good. Eric and James were the ones, as I said previously, that said Bitcoin ETFs are going to happen on the 11th or 10th of January. When everybody else said they're not, Eric and James said they are, and they were correct. And they're both Bloomberg ETF specialist analysts. They're not random people. They're very essentially high up there, you could say. They also said Ethereum ETFs are going to happen at a particular date. And they did, when everybody else said they're not. Fast forward to today, or a few days back, where Eric and James came out from Bloomberg once again and said that there's a 65% chance that we're going to get some sort of nod of an approval of an XRP ETF from the SEC. That was a few days back when Eric and James said that. They said this week we're going to get some sort of noise, some sort of nod of an approval of certain stages for XRP ETF from the SEC. So you fast forward to today to this. US SEC could approve a grayscale XRP ETF tomorrow. The cryptocurrency landscape is going on a massive buzz right now, with anticipations as the US Securities Exchange Commission, SEC, is poised to acknowledge Grayscale's investment application to convert its XRP trust into a spot, essentially ETF, as early as February 13th, 2025, which is pretty much today. This development, highlighted by Fox Business journalist Alan Torrent, marks a significant milestone in the integration of digital assets into traditional financial instruments. Grayscale's Investments, a prominent digital currency asset management firm, has been at the forefront of bridging the gap between cryptocurrencies and conventional finance. On January 30th, 2025, the firm submitted a 19B4 filing to the SEC, seeking approval to transition its existing XRP trust into a publicly traded ETF. This move aims to provide investors with essentially regulated exposure to XRP without the complexities associated with direct essential cryptocurrency ownership. The SEC typically has a 15-day window to respond to such filings, setting the stage for a potential acknowledgement by February 13th. While acknowledgement does not equate to approval, it could just be acknowledgement. It signifies the cementness of a review process that could essentially cultivate into a first ever XRP focused ETF in the United States. XRP, the digital asset associated with Ripple Labs, has been embroiled in legal disputes with the SEC since December 2020. The SEC lawsuit alleged that Ripple conducted essentially unregistered securities offerings through its sale of XRP a long time ago. In a landmark essentially ruling in 2023, a federal judge determined that while Ripple violated security laws in sales to institutional clients, but the provided sales to retail investors was not essentially secured in any sort of a way. And then this nuanced decision has profound implications for XRP's regulatory status all these years, for its potential of turning into a ETF. The legal clarity provided by this ruling has embroiled asset managers to explore XRP-based investment products. Grayscale's initiative reflects essentially a broader industry trend of integrating digital assets into mainstream financial instruments, offering investors diversified exposure to the burgeoning cryptocurrency market space, and Grayscale is not alone in the pursuit of an XRP ETF. In recent weeks, several asset manager firms have also filed applications for the SEC to launch essentially XRP-focused ETFs. For example, Bitwise Asset Management filed a registration statement to introduce a spot XRP ETF, emphasizing XRP's decentralized nature and asserting that it is not a security. CoinShare, in collaboration with Nasdaq, CoinShare seeks essentially approval to list and trade XRP and Litecoin ETFs, aiming to capitalize on the growing investor demand for digital asset-focused products. The CBOE Global Markets submitted multiple 19B4 filings to the SEC on behalf of asset managers like WisdomTree, 21 Shares, Carry Capital, and Bitwise, proposing the launch of an XRP spot ETF. These filings underscore the heightened interest in offerings related to investment vehicles centered on XRP, reflecting an asset essential maturation and increasing acceptance of cryptocurrencies in traditional finance. The potential approval of XRP ETFs carries a significant implications for both the cryptocurrency market and investors. For investors, ETFs offer a familiar and regulated avenue to gain exposure to digital assets without the need to manage the underlying cryptocurrency directly. This accessibility could attract a broader essentially investor basis, including institutional investors who have mandates restricting direct crypto investments. For the cryptocurrency market, the introduction of XRP ETFs could enhance liquidity and price discovery, contributing to the asset stability and integration into the broader financial ecosystem. Moreover, it signals a growing recognition of digital assets as legitimate components of diversified investment portfolios. As the SEC prepares to acknowledge Grayscale's XRP ETF application, the financial industry stands at a pivotal juncture right now. The traditional market, the traditional financial and digital assets is becoming increasingly tangible, offering investors novel opportunities to participate in evolving essentially landscapes, while regulatory hurdles remain the momentum towards the integrating of cryptocurrencies like XRP into the mainstream financial products is undeniable, hurdling a new era of investment possibilities. So, are we going to be getting a green light for an XRP ETF by the SEC today? Well, Eric and James have put it at a 65% chance of an approval happening this week from an XRP ETF, but 65% chance leaves a room for error. When they said for a Bitcoin ETF happening, they said pretty much 90% of the chance of approval. And then when they said essentially for Ethereum, it was pretty much sitting at a 75 to 85 to 90% approval as well. So XRP got a 65% chance of approval. The reason why XRP did pretty much give it a 65% chance of approval is because the case is still going on. Now, this isn't for the SEC today. It's not for the SEC to greenlight XRP ETFs, although they can, but it's not for the SEC to greenlight it. It's just for the SEC to acknowledge the Grayscale, essentially, ETF. But they can if they want to, but this is for them to acknowledge it today for the XRP ETF from Grayscale. So if anybody's telling you inside the crypto space that XRP ETFs are going to get approved today, I hope they do as well. I'll be honest with you. I'm one of the biggest, or not even one of, as far as I know, I'm the biggest XRP supporter since day one. So I hope they do give a green light to XRP, but the reality of it is there's two things online. One is that it could be a green light, and two, it could just be acknowledgement of the XRP Grayscale essentially trust. But Eric and James have given it a 65% chance of an approval happening, some sort of announcement coming this week regarding XRP ETFs. But again, for XRP ETFs to happen, this case needs to get dropped. It needs to be dismissed or settled. If they approve an XRP ETF before the case gets dropped or settled, then that means that case is going to get dropped extremely quick. Either way, the case is going to get dropped, to be fairly honest. But now, what I want to say right now is that on that news regarding XRP, essentially Grayscale Trust, and the announcement that's going to be coming up today of what it's going to be, all good things must come to an end, which they have now. So this was the endings of tonight's live. And the last news was pretty much the XRP ETF regarding Grayscale. If you're watching this for the first time ever, this is the CMF Live. It stands for Crypto Mouse Family. My name is Miles. I go by the persona of Crypto Mouse. I'm the host of this live, Monday to Friday, 11:25 p.m. UK time, United Kingdom time. You can tune into this live, 11:25 p.m. United Kingdom time onwards, where I talk about the most recent news that's happening around the world in terms of cryptocurrencies, CBDCs, AI, politics, and regulations. Vital information for you to know about regarding the world that we're heading towards, a very digital future. Also, we do Q&As on this live as well, which, as always, if you do ever have any questions, put it down in the comment section. I'll be more than happy to answer any questions you may have. I'm here to help everyone completely for free, which I've been doing for over 2.5 years now. And the disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. So if you watch this for the first time ever, tune in tomorrow for episode 262, because what you're watching right now is episode 261. We are on episode 261 of the CMF Live, which is incredible. Good night, Miles, and all CMF. Thank you for all the news and great live. GP, no problem, but I'll see you tomorrow, same time as usual. Miles, I'm Iman. Thank you once again for a fantastic, informative live. Iman, I know you're Iman. I'm just calling you E because your name is now E. But I know who you are, brother. It's good to see you as well. Good to see you yesterday and today. Good night, Miles. Thanks for all the news. See you tomorrow. Free and forever. See you tomorrow, sometimes usual as well. Good night, Miles and family. Great live. Many thanks. See you later. Ian, see you tomorrow, sometimes usual. Good night, Miles and family. Great life. Many thanks. See you tomorrow. Let's go. Thanks, Legend. Day and night, CMF. Let's go, Shelly. See you tomorrow, same time as usual. Great job, Miles. Let's go, Scott. And by the way, thank you so much to everyone who liked this live, who retweeted this live on X. And thanks so much to everyone who hashtagged the XRP on me inside the comment section outside the live, who liked each other's comments as well. Honestly, thanks so much to everyone who always shares this live on X, retweets this live on X, and comments on outside the live on X. Essentially, thanks so much to everyone, honestly. Thanks so much to everyone on YouTube who's also watching us right now, who's also liking the live and putting comments outside live as well. Tony, let's go. See you tomorrow, sometimes as usual. Troy, see you tomorrow, sometimes as usual as well. Thanks, good night. Let's go, Tony. See you tomorrow, sometimes as usual. I will be seeing everybody tomorrow. Thank you, Miles. Have a great night, everyone. Let's go, Stormy. Stormy, see you tomorrow, sometimes as usual as well. I'll see everybody tomorrow, same timing as usual. Once again, thanks so much to everyone who liked, retweeted, and honestly, thanks so much to everyone. I'll see everybody tomorrow, same time as usual, for episode 262 of the CMF Live. Outstanding, Miles. As always, I truly appreciate your prep for our program. Let's go, Scott. And if you haven't already, subscribe, follow, and we have our own X communities page, which again is completely free of source. Join into it if you already have it on X, the Crypto Mouse Family Lounge. Join into it on X as an X Spaces, and join a Telegram group, also free. Good day. Good day. Good night, Miles. God bless. Let's go. Episode 262. Let's go, Cali. See you tomorrow, sometimes as usual. Evening, Miles. Evening, and thanks. Let's go, Miles. See you tomorrow, sometimes as usual. Good night, Miles. I guess I will catch up. Let's go, Funky Brother. Congrats on episode 261. Let's go, Scott. I'll see everybody tomorrow, same timing as usual. Everybody have a great day or a good night, depending on where you are around the world. See everybody tomorrow, same time as usual, for episode 262 of the CMF Live. See you tomorrow, same time as usual. Have a great night or a good day, depending on where you are around the world. See everybody tomorrow, same time as usual, 11:25 p.m. United Kingdom time.